Good evening, everyone. Welcome. If you're just joining us, kindly settle in as we get set to commence on today's live day three of the 30-day backtest challenge for traders who are looking to form, create, and find a possible working model of trading that they can use in crafting their trading edge and getting better at this whole trading game. My name is Divine Crypto, and I'm a young crypto trader, enthusiast, blockchain educator, founder, and head of marketing at Divine Trader. And today I'll be discussing solely relating to trading on how I was able to study this price action that I'm about to share with you and the things that can be noted. It's a very easy model to getting trend continuation entries as a trader. Very simple, no jargon, no bullshit, just straight direct to the point. Now, this is day three, and on this session, please kindly note that whatever it is that we are studying, whatever it is that we are learning, I will be taking notes of them afterwards and putting them in. I said I should call that a compendium for this series because we will be cutting across various models of charting, trade entries, and strategies that we come across on the chart across this 30-day period. Day one, day two, we talked about cell type trend continuation entries. We talked about how to pick a valid order block entry amongst um, a range of other blocks to know which is actually valid. So now on day three, we are now shifting the aim or shifting our gaze into a trending market to see how we can be able to get into price on a trending market and take advantage. Please, if you are hearing, if you are listening, kindly stay till the end and do well to take notes of whatever it is that we are learning. I am sharing my screen with you in a bit. Sorry, please, I'm trying to share my screen. All right. So now here on the chart, this is what we have. Sorry for that break in transmission, please. If you are still here, if you can hear me, if you can see my screen, kindly let me know. Oh, my screen isn't showing. How about now, please? All right. All right. So back to what we have for today. This is where we have our eyes on price action over here. And really, this is something that I want us to kind of take note of and learn from, because it is something that, you know, I will share where exactly we'll be taking the drill from, and I'll share something that looks like a replica, and maybe on the next session we will treat that. So over here, this is where my area of focus starts. From this point to this point, where price came back to tap into this point and move to the upside, because really, for me, the aim is not just to like take any trades or take any type of trades. We are looking at extracting from what we are seeing. You understand? The aim is not taking anyhow trades or any type of trades. No. The aim is we're looking at extracting from what we are seeing live on the chart, taking notes, taking record of that data, of that information, so that when next we see price or chart present us these patterns or these features, characteristics, we now know that, oh, there is a tendency that this is what is supposed to happen next. And really, that's how you come up creating an edge for yourself as a trader, being able to take trading decisions courtesy of a proven method or system that has time and time again been replicated, been shown in the market, in the charts or in the price charts of whatever asset it is that you are trading. So now back to what we are sharing, or what we are sharing, sorry. Now this is the area of interest. We are looking to see why price fell back into this point, and uh, why exactly was here that this reversal had to take place from. So now on the daily, we can see that yes, price had been on a very smooth uptrend. And I want you to note that this is a chart that's of November 2023 last year on Bitcoin slash USDT perpetual contract. So now, are we about to see another replica of this same price action? Because we are seeing that currently price is in an uptrend also at this point in time. So now we can see that from this point, we had been in a very, very sweet uptrend. I think this is one leg, two legs, three legs, four. So four legs. Now, on this fifth leg is where we have our price action that we are looking to pick up from. And we can see that we have this little area of contention over this high, and at the point where price broke above it, after its shenanigan, it still came back to that point to tap into price and move backward. So now this is something that will be taking note in an uptrending market on how you can also find or know exactly some of the places that price should retest back in its reversal before it continues the major impulsive move to the upside. Now, moving down to the 4-hour time frame so that we can get this perspective right. Oops. Oh God, I moved this thing down too much. All right. So let me take back off this previous price set so that we do not, as usual, confuse ourselves. And this is something I note again. Please, backtesting is not the same as real life trading. Welcome. Thank you. Backtesting is not the same as real life trading. Whilst you are backtesting, you simply already know where price has acted and you are looking at learning from it. So it's not like you are going to feel bossy. You just have to put that mental fragment in your head of, oh, let me learn from what price did here so that I can replicate this next time if price gives me this. Not that you are a beast at back testing and you feel like, oh, you are going to be 100% good. Actual trading brings out the stuff in you. What we are doing here is preparing the ground of how we are actually going to take this trade so that we don't result in crazy losses, blowing of accounts, and excessive liquidity calls. Now, on the 4 hour, we can see a much broader representation of price action. So now, one thing I'm taking note of is that really price is fractal. So some of these actions should be taken note of in its entirety of how the origin of that price action came to be about, rather than just focusing on, one spot, maybe because you saw another block somewhere. No, 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 no. You have to pick it up from the origin. So over here, we can see this price action that we are seeing here is something that I would want to take note, in the sense that when next I get to see a point that I am looking at taking a buy from, it would most likely or should most likely present me this price reaction internally, which is first of all a wick creating a high and coming down to have this whole zigzag movement and um, bullish flag style to the upside before breaking above this high where the wick is. So this is something I will take note of when I am compiling the data for this particular approach to trading, because it all helps so that when you are seeing these things, if you are able to see a replication of these exact or some of these exact same price display or price action from the origin point, it will help you solidify the basis of your analysis, your trading, and your entries more. So now, do away with that. Duly noted that yes, this was the behavior price gave as at this point. Now, one next thing to also note is I'm seeing price presenting us with a clear order block internally on the 4 hour time frame. So, but then, um, but then if you should scroll to the the daily time frame, I want us to take note of something there, please. Okay, sorry. So on the daily, I all right. On the daily time frame, you can see this, like there had been a series of choppy price action, and at this point this is another block, but the engulfing candle was what broke above structure. The engulfing candle was what broke above structure. Taking note of that. Now back to the 4 hour time frame. So now this is literally looking also like an order block, sorry, like a fair value gap if we are going to extend it properly. So now that is one other thing to note, that the impulsive candle that broke above structure in this type of price action is where our eyes should lay on. So now moving down to the 4 hour, we've noticed a much more um, reason to actually go in on this, which is this. Okay, yeah, this other block here. Now you may want to ask, not necessarily does this other block have to break before a low like this. Most times it's being told that your other block has to grab liquidity this way. No, this also is a very, very clear graph of liquidity coming from this asset or coming from this other block, because price is at a resistance and most persons will be looking to sell the market to the downside at this point in time. Yes, but now we are seeing that, yes, we are seeing that after this initiated move here, price reversed and coming up here, broke above this high and would have grabbed whatever liquidity of traders that were sitting here. So that's enough liquidity graph on its own. Now let's check the 2 hour, then the 1 hour time frame to see if we can take note of one or two other factors that are playing out. But I really think this is getting, or this should be getting more clearer to us. So now on this section, I really can't pinpoint anything to be seen clearly. I delve into the 1 hour better. All right. So now on the 1 hour time frame now, what can we see? What can we see? This is this is this is this is crazy. So now we can see an order block right at the hem of this mini price movement here. You can see an order block. Now, as usual, this is somewhere that my interest would have laid a little bit, and also this fair value gap. And the reason why I am going for this fair value gap is basically because on the higher time frame, what was the main point of interest? Also a fair value gap. So on the lower time frame, that should be something that helps me in conditioning um, what I am looking at. So now, having marked out those 2 points, I'd like to scale down into a lesser time frame. I'm a sucker for refined entries. It hurts me sometimes. I would always say it, but uh, it does its job of minimizing the risk exposure that traders have to suffer in the event of things going south for them whilst they are trading. Because there may be times where your model of trading can come in place. All right. Sorry, please. All right, all right. Much more refined entry on or from the 15 minutes. So, but then, I was saying something, please, that I am a sucker for like risk management. And the thing is, most traders overlook the need for having risk management embedded into how they trade. And it's not necessarily about the fact that before you place every trade, you should have a stop loss. No, that is simply just a quota or a part of risk management. In general, risk management is your total internal approach, set of rules that you are using to approach this market as a person. We all have our different greed levels, we all have our different loss um, taking levels or levels at which you can take in losses. For someone, he might be able to see his account going in red and he's still chill. So his risk management approach should not be the same to somebody who's a chicken-minded person who would freak out at the sight of any reduction to his assets. So now your risk management should actually should actually be defined from your own personal perspective. So now for me, I know very well that coming into trading, except you have or you are a trust fund baby, there is no free money anywhere. So you don't have to expose or overexpose yourself, which is why I try to minimize the exposure I give myself while taking trades, and also have it to be that, oh, I try not to um, jump on more than a fixed number of trades over time. This for me may be my set of risk management approaches. Oh, you can see one other thing is I've been drilling only Bitcoin. All the charts, all the study we've been having is only Bitcoin. That's still risk management. Why? Because I am disciplined enough, or I am learning to be disciplined enough to put my gaze on one asset and see that, oh, my focus is not, shaking from it. This is a little or very, very, very myopic trait that has a very, very external ripple effect to you as a trader, because if you pick one asset and you can be true to that one asset, then also you can pick one strategy, one model, and be true to that strategy, that model, until it yields, until it gets you the results you want it to get you. Because I believe also that we as traders should learn to solidify before diversifying, be able to get one thing right, get it right again, and look for some other things. Now, back to what I was sharing. So, now this is the fair value gap. And one thing I'm noting is this, ray of liquidity over here. That's also another reason to give more confidence or more things to take note of on this model of trading. After the break above the most recent high, we saw price coming back and giving us this little move here. This move, he has given us this little move here and breaking above it again, presenting us with a little pool of liquidity. And one other thing I noticed while I was studying this was giving me the vibe of a cup and handle pattern. I don't know why. I'll share that zoomed out later on once I am done with getting the drill that we are looking at getting from this. Now moving on to the 5 minute time frame, we can see that, oh, moving up to the 5 minute time frame, I want to show and share something with you guys. Why the hell is this going too backward? Ah, I thought I had clear this. So sorry, so sorry. All right. So sorry for that. I'm trying to get back to that point. All right. Here we go. All right. So I think I'd have to still cut this down back a little bit. Sorry, just to enable me not waste much time or too much time in figuring out shit. Now that same other block, sorry, fair value gap that we saw is where we are putting our gaze on. And all right, so this is the liquidity spot that I talked about. Now there's something I am noticing over here, which is we can still see another block. Sorry, an imbalance over here. Yes, we can still see an imbalance over here. But now, this was something I learned from the liquidity providers concept, which is the concept of king order blocks. Yes, king OBs. And these are when you have 2 weeks of very, very momentum body candles lay across each other in between in an area of void, fair value gap, imbalance. Now let's take a look at this on a much lesser time frame, and we'll see that the king OB um, actually, or that week that we see, is really just another block in disguise. Oops. All right. Yeah. So here we go. Now I know this may seem very, very, very unrealistic, like very, very, very unrealistic, because now this was this was the exact same place price came back to react to. And when I was able to like see this price action, it blew my mind. I'm not going to lie. It blew my mind. And it gave me the conviction that, oh, in this trading thing, there are prints that actually work. You just have to be able to carry enough to see it. Whatever model you are conversant with, it works. But you just have to be patient enough to put in the work and see how price works with that model, so that you can now blend with it. And now that's one of the reasons why we are having this session, to be able to take note of price action based on certain models and concepts as such. Things like smart money concept, liquidity grab, the likes of other blocks, fair value gaps, and break of structure, and all of those um, moves or names. So now this was the area of um, entry on the 1 minute time frame. Things like this, they really do look surreal. Yes, they really do. But to be honest, they work because take it from me, yes, I have taken such trades that it takes an eagle's eye to be able to see some of those price action. But that's really why, or one of the reasons why trading is really like different because when you have that model, you have it working for you. You don't have to. I don't know why this is giving me issues. It's just going too farther away and it's delaying my time. But let's just be patient with the price because trading is 80%, waiting 20% trading. So let's exhibit patience. I don't know. Where is the all right? Thank God. Found it. Found you. All right. So this was that drill point that we went up to the 1 minute time frame to confirm. Yep. Yeah, this was that point. And really, let's not be too harsh on ourselves or try to lie to ourselves. This is a model that would actually result in very, very voluminous profit range. But as I said, let's be honest with ourselves. We may not be able to stand, you know, talking about myself privately, though, stand taking very, 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 very um long overdue trades due to capital proportion. So let's see. I want where the highest point was um, on the next high that was created. Oops. All right, your price is already in motion. Sincere apologies for the break in transmission. Can we get back right into the session where we stopped? We were highlighting the final reaction of price on our lower time frame POI, and we can see that this was how really price reacted to that point of ours. I'm battling terrible service issues at this point in time. So, but I just want to be able to share with you the aftermath of price action. Oh God, this is annoying. Please, if you are joining this session for the first time or you are watching the recording anywhere, welcome back to a 30-day backtest challenge organized by the Divine Crypto, a up and rising crypto sensation in the Nigerian community. And this session, what we are looking at doing for the whole 30 days is really studying back price action for Bitcoin, particularly, and extracting previous um, market reactions and using that data to be able to create us a working trading model or models at the end of the 30-day period. And also, I made mention of the fact that this live will be commencing 9 p.m. every day across this 30-day period. That's one. Two, the notes that will be taken from every day's study and specimen will be compiled into a compendium and shared to the members of the Divine Trade Hub community. Divine Trade Hub is a growing crypto brand that's looking to enlighten the populace and crypto adoption in Nigeria by providing its users, audience, and community members lots of crypto education resources and conversion of crypto to naira services. So as a trader, when those your profits begin coming in, you should recall that the best place to trade these assets would be with a divine trader platform where we don't just give you the service you need, we also educate and enlighten you on the crypto, blockchain, and Web3 industries. So now I was saying something that this was, price reacting to our areas of interest on the lower time frame. Now, sincere apologies for the showing price tapping to this level. I might quickly that point and repoint out that this exact point was the POI for persons who may have it in their mind to stem up a doubt. But then I also made mention of something that now this was the highest point price had gone to. This was the highest point price I had gone to. And man, this is crazy. This is really, 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 really crazy. A 27% move on a 19.19% risk exposure. That's man. But definitely now, this may not be to the extent of which I will hold this trade. I might hold and exit at minimal levels around here because um, this is a model that I have not over time back tested. This is the first time of coming in contact. So we don't want to like expect too much, like we know it like the back of our hands. No, but simply learn, see what the price are I'm doing, then react. So now Yep. Now let me backdate this again for clarity purpose. Oh God, what's this? All right, so let me backdate this and quickly jump into the little price drill we had for that entry once again before calling it a day. Please, thank you for staying. Kindly subscribe to this channel and ensure you await loads and loads and loads of premium crypto educational content, topics, and videos to guide you on your trading journey. The 30-day backtest challenge is just the first of its kind, which is as I say, to help traders who are struggling to be able to craft out an edge that works for them. So now, what I am really doing is with the edge, or sorry, the knowledge I have over the last 5 years of practice and play into in the crypto industry, there are certain basic concepts that I have seen that these basic concepts actually work, but most people do not know how to see them, how to use them, and even they work. So now, this series going back in chart on time to see and learn from price action would help us at the end compile whatever reasons price gave us in our study to be able to come up with a working model. And okay, validation for validation reasons we have checked, and this is the point. So now, that's the 38565 to the 38544 level. Yeah, 38. Let's check the low 38544 level. So now this is um the that's the refined entry we got all the way from the 4 hour drill and price study that we had, moving down to the 2 hour, to the 1 hour, to the 15 minutes, and the 5 minutes down to lesser time frame. So now I'll be taking note of this price reactions with their timestamps and everything so that it is a little bit more easy for the people that will be getting access to this, so that you know that, oh, this was a price delivery on the 1 hour time frame. So I should expect something like this next time, either on the 1 hour time frame or on this time frame, courtesy of the data. That is why that compendium that will be compiled at the end of this session is a powerful tool for traders. So now we can see this, and really this is something that gets me fascinated because these are the types of trades I want to be taking. These are the types of trade I want to be adding to my arsenal. So with that being said, thank you all for your time here today. Thank you all for your time here today. Don't forget to click the subscribe button, like, share, and send the link to anyone who's also a struggling trader that's looking to get better at his grind, to attend, join the 30-day backtest challenge to learn and see for themselves why price reacts the way it reacts. Thank you, Divine Crypto here. See you next time.